Hello and welcome again to another financial analysis video with myself, Moe Damin, and Ted Wayman. So today we're going to be looking at Niu Technologies. Now, the goal for this show is to help you improve your business acumen by helping you better understand the language of business, which is finance. And we do that by basically analyzing the financial statements of famous, well-known companies so that you can learn how we do that, and you can start doing the same process with the same company or any other company that you're looking at, especially the annual and the quarterly reports. So quick note, background around Niu Technologies before we go into the finances so you have some context. So Niu, basically they manufacture and sell what they say two-wheeled electric vehicles for the urban area. So think of scooters, electric scooters, mopeds, as well as bicycles. And there's some interesting notes about this business, which we will come on to. Now, this company was a request from one of our viewers, and I'll talk a little bit later, so stick around because I'll talk a little bit later about how you can make a request of a company that you're interested in. So Dripper made two requests, right? Obviously, he's very keen about this business. So here is your video. I hope you find it useful. Quick note on the business. Now, they just released their third quarter results, and sales were down by 20%. In fact, what is interesting is that 80% of their sales is still into the China market, and the Chinese market sales has gone down by 33% according to their third quarter statement. Obviously a reflection of the strict COVID lockdown measures that they still had back then, and obviously that's having an impact, but they are trying to expand into other countries further, like the US, UK, Europe region, etc. Quick note on the share price, and again, stick around for that because towards the end, we're going to talk about the share price and look at that in context with what we've read about the financial statement, so you get a very complete picture of what's going on. They floated in 2020, and if you'd invested back then, you'd be sitting on a loss of about 20%. If you invested a year ago, you'd be sitting on a loss of about 70%. And interestingly, in the last 5 days, the share price has increased 20%. So clearly some fluctuations going on there. We're going to look and see if something about the financial statement can give us a little idea around why that might be the case. So let's transfer over to Ted, and he's going to walk us through the financial statements and kind of teach you how you can analyze the financial statements of a company like this and any other similar companies in the industry.
Good to see you again, and good to see all of our viewers. Welcome welcome back to our subscribers. Welcome to those of you who have not subscribed. Maybe you're new to the channel. If you are new to the channel, please do subscribe. And if you like what you hear, then do hit the like and share button as well as the subscribe button. Now, here are the financial statements. This is their Form 10K. This is on their website. And there's a lot of information about the business on there, and we are going to whiz all the way through all of this mumbo. Well, it's not mumbo jumbo, it's all very important, but we're going to go down to kind of the key pages for me, which are the numbers, and the numbers start on page 145. So actually we're going to start on page 147 of 189 with the income statement. So here is the income statement. Now, this is a Chinese company, so they are quoting in renminbi, so in yuan, okay? And what they've got in the last column is the US dollar equivalent. So when we look at their revenue, and this is they're big numbers here. So life would be a lot easier if they just maybe took a few of the moved a decimal place, for example. But anyway, so 3.7, so you got 3.7 billion renminbi, which is basically 581 million US dollars. Okay, so that kind of just gives you an idea. So we're going to be talking in renminbi, but if you want to sort of get your head around, if you don't think in renminbi, for example, and you think closer to the US or UK or Europe, for example, then there is your dollar equivalent. kind of obviously dollar, the world's reserve currency. So sales 3.7 billion. 3.7 billion from 2.4 billion, an increase of 52%. So very significant increase 20 to 21. So these guys are growing and growing rapidly. And if you think and look around the streets, you'll see lots of scooters around. I don't know if they make the scooters on the streets. As Moeed said, their biggest market is China. But this is, clearly a very, very popular segment, and these guys are growing. Their gross margin here is about 20%. Okay, so basically that tells me that if you pay $100 for an electric scooter, it costs them about $80 to make it. Okay, and that's a pretty consistent margin, and that doesn't appear unreasonable. They then got all the costs of running the business, so they're selling and marketing, R&D and general admin. Interesting that they got all this R&D, so it's a competitive marketplace, and they want to stay at the forefront. They want their scooters to be the kind of, right at the cutting edge. So the total cost of running this business are about 600 million on a gross profit of 800 million, leaving them with, after a little bit of government grants, which is quite nice, from the Chinese government, I would guess, leaving them an operating income or an operating profit effectively of 252 million. That's just about a 7%. And then they've got a little bit of other investment. Interesting enough, here they got this quite a large, significant chunk of investment income. Not sure exactly what that relates to. We'll have a look at the balance sheet and see if we can have a guess. But that's a fairly significant chunk, plus some interest income, a little bit of interest expense, suggesting there's a little bit of debt sitting on the balance sheet. And then they are paying tax as well, leaving the shareholders with about 225 million renminbi, which is about $35 million as a bottom line net profit. It's about 6% net margin, which means that they are they're not massively profitable, but I think rather than thinking about in terms of the profitability, we're looking at a company like this and thinking about the potential of the market, and if they can establish a good brand name, a good foothold in that market, as the market grows, these guys will grow along with it. So there's our income statement. Let's go and have a look at the balance sheet, see about the financial strength. So up here we've got the assets. Total assets are about 2.4 trillion. That's about $383 million dollars, and that is predominantly the current assets. So these are a manufacturing business. This is the stuff they're manufacturing with, the property, plant and equipment. They don't really have a lot of other assets. You'll notice that there's also this right of use leased asset. So again, some of the interest payments will be on that. That's the difference between buying a photocopier and buying a photocopier on hire purchase. It's still effectively your photocopier. So there's just a distinction between those two there. So there's about 400 million of stuff that they need as manufacturing. But what they do have is on their current assets. Now look at the current assets, cash, and then all the way down to about here, all of this is basically cash. So these guys, they floated, they've done a fundraising, they're stuffed full of cash, and they're using that cash now in order to sort of, fund the business and drive the business up. And then just below that, we've got accounts receivable, people who owe them money, inventories, and then a few prepayments. So what you'd expect to see in your current assets. So nearly 2 trillion of current assets compared with about $500 billion of non-current assets. In terms of the liabilities, some of the liabilities are here and some are on the next page. These are the current liabilities, the things that we have to pay soon. You'll notice that their current liabilities were about 1.1 trillion compared with the current liabilities 1.1 trillion compared with the current assets of 1.9 trillion. So liquidity doesn't look like an issue. These guys are stuffed full of cash. So they've done their fundraising, they've got a lot of money. They've also got quite a lot of debt sitting there. Quite interesting to see that there's they've been raising debt during the year. So there's a little bit of debt here, notes payable, And it's quite interesting that they're short-term notes payable. So you wouldn't usually see that. And we'll see on the non-current liabilities that there doesn't appear to be any long-term debt. Now, the other thing that I can't quite work out is, if you notice here, this line and this line, this is advances from customers, 17 million, and deferred revenue, which is basically money paid to you in advance of you providing the good or service, 32 million. Put those two together, that's 40 million. Now, I don't know how, it would make sense if this was a company that was running the scooters, i.e. renting them out, and people were paying on a subscription basis. But this looks to me like people are paying them in advance in order to secure orders. Okay, and that's obviously going to have a positive effect on their cash flow statement. So quite interested to note those two. I wouldn't have expected to see a lot of deferred revenue for a manufacturing business, unless of course what they're producing everybody wants, and therefore people are actually paying a deposit now in order to secure their supply chains. Here's the non-current liabilities. Again, some more deferred revenue. So this is looking like, people are paying them today, but they're not going to get the actual product until, over a year's time, which suggests either that they've got a very, very strong supply order book pipeline of business, or well, I don't know what the or is. So I can't think of any other reason of having that deferred revenue. Now, if anybody knows this business better than I do and would like to comment on that, then please do leave your comments in the comment section. Do help us out here. Obviously, you can be as polite as you like. In fact, you can be polite. Please don't be impolite. Here's the operating leases. So you remember we talked about, they've got debt. So they do have they're paying interest, and therefore they've got operating leases which are funding the right of use assets. Okay, and there's some in the current liabilities as well. So not a huge amount of debt. They're 47 million, leaving them with total liabilities of nearly 1.2. If you remember, their total assets are about 2.4 billion, and the difference is the equity. Now, the equity down here, let's just move that up a little bit. So the equity very much funded through the investment. So this is the kind of the flotation, raised 1.9 trillion, and you'll notice that they're actually sitting on retained losses. So yes, they're making a profit this year, and they made a profit last year, but they haven't been making a profit forever. Okay, so they have been making losses, and now sort of proof of concept, getting it all working, getting people to be interested in it, and now those losses are starting to bear fruit, that investment, and they are starting to make profits. And the idea is that they will then repay that investment, cover those losses, and start to be able to pay dividends, share buybacks, etc., etc. So balance sheet looks pretty strong to me. Yeah, nothing really kind of jumping out in terms of the in terms of the business. We've done the income statement. Here is their movement in equity. So we're looking at this column here, the accumulated deficit, and you'll notice that they do have this massive loss. I mean, this is the beginning of 2019. They had a 1.1 trillion renminbi loss, and then they've been making profits ever since, and that loss is just slowly starting to be eroded, and they will, in the next few years, based on these numbers, they will cover those losses. They'll be kind of in profit, so to speak, and the company, and it's very much funded through this through the issue of shares. Okay, so we can see yeah, I mean, there's a little bit of share-based compensation, so we don't actually have the listing, so to speak, in terms of where they actually raise that money through the listing on this, because it'll happen before 2019. I'm looking at the this is the cash flow statement. So the cash flow statement, this is our key number here. Very, very strong cash flow. So yes, they're making a profit, and they are generating cash. Now that's good. So these guys, they kind of, they've turned the corner. They're starting to generate cash. They're still investing in the future of the business. They're growing rapidly, and they can keep that cash in the business, and they can use it in order to fund their growth. quite a lot of some depreciation. There's the depreciation and amortization in there, which is a non-cash expense based on the property, plant, and equipment. They've got some share-based compensation, so they are paying their customers. Sorry, they're paying their staff, but they're paying them in shares. Obviously, that's going to save their cash flow. And there's a little bit of sort of movement in the working capital. As they grow, they need more cash tied up in the working capital. Down here in the investing activities, look at this section down here. Just if you are reading these, be very careful. Some of you will be will remember or will have seen this in previous videos, but this bit here, this isn't really investing. This is more just parking cash. I've got some cash and I need to put it to one side, so to speak. So you'll notice that these two numbers are pretty large. This is just, you know, I've got some money, I put it on deposit. I need some money, I take it off deposit. Okay, because of IFRS, they have to account for it through their investing activities. But, you know, to all intents and purposes, this is just cash. So what we're really interested in is this one here, which is where they're buying property, plant, and equipment, you know, for the future of the business. And the rest of this is all just basically parking cash. And then financing activities down here. Now, quite interesting. You can see this line here suggests that this is a subtotal. It's not a subtotal, so I think, you know, you just ignore that. Ignore this line here. I don't know why they've got it in, but again, you can see the proceeds from short-term bank borrowings, the repayment of short-term bank borrowings. This is refinancing. Okay, so this is debt refinancing going on, and you can see some cash received from employee stock options. They're buying back their shares in order to give them to the employees. So, you know, at the end of the day, they've got a lot of cash sitting on the balance sheet, but actually they've got lots of investments as well. So the total amount of cash, as we said, it isn't just cash. It's also investments which are you know, aren't shown on this sheet. So really, the summary is for these guys, they are, you know, they're profitable, they're generating cash, they've got a strong balance sheet, they're growing rapidly, you know, they're ticking a lot of boxes. You know, there's no kind of, you know, nothing to be worried about, I think, in terms of the balance sheet. Income statement, in terms of the financial statements, the performance. So if we have a look at their share price, we can see now, this is quite interesting. Now, just be careful here when we're looking at this, because they give the share price in US dollars, and of course we are looking at renminbi, so we need to make a little bit of conversion. Now, I reckon on my conversion, I may have it wrong, I reckon they're trading on about 12 times earnings, but here we've got 100 times earnings. Now, 100 times earnings is really expensive, so I reckon they're worth that's about $400 million. I reckon that's about 2.8 trillion renminbi. I may be wrong, I may have got my exchange rates wrong, but I reckon they're 12 times earnings. But this Google Finance reckons it's about 100 times earnings. Anyway, there's no dividend. If it's really that, then that's expensive. That looks expensive to me. But if it's 12 times earnings, then it doesn't look overly expensive. These guys they're not going to go to zero. I can't see it going to zero. I'm not saying it can't go lower, but I can't see it going to zero. I think this looks pretty punchy valuation up here. And so what you've really just seen here is a correction where, you know, it's just come off the boil and just said, look, you know, we're moving away from the world of crazy valuations. I don't think it's going to go down. I don't know the product very well. So I don't know whether they've kind of, you know, what their tie-up is, for example, but there's no reason, I think, why this company shouldn't see, you know, some pretty reasonable growth, because you've got, you know, very rapid growth in top line, good profitability, and as long as you've got a good product which isn't going to get you know, sort of, you know, taken out of the market by another product, then there's no reason why these guys shouldn't be able to develop further. So there you go, Moe. That's kind of my take on Niu Technologies. It's you know, it's you know, the finances are looking good, pretty healthy. Is it an investment? I have no idea at all. I'm not a shareholder in it, but I'm sure that a lot of people will be reading that and saying, "Yep, I'll buy shares in it." I'm not sure I would be shorting these shares. Let's put it like that. There's nothing out there that just says these guys are going to go down in value, but I think they could well go up in value if they get their strategy right.
Yeah, that was interesting, and thank you, Dripper, for making that request. This was an interesting company to look at and to analyze the financial statements. So I promised to share with you how you can make your request to us as well. In fact, about 98% of the companies we analyze here are requests from our viewers. So very simply, on any one of our videos, all you need to do is leave a note in the comment section, of course, mention the name of the company that you're interested in, and tell us why you're interested in them. So whether you are a salesperson and you're trying to sell your services or products to the company, whether you're an investor, or even if you are going to have an interview with this company and you want to get an understanding of their finances, that you can really impress the interviewer. Whatever your story and reason, do leave that information in the comment section and we will analyze the company for you. So until the next video, thank you, Ted. Thank you, everyone else. We'll see you in the next one.
Thanks a lot, Moe. Catch you later.